one of the first sell-side analysts to pick up coverage on the name, and the story continues to look promising with a lot of growth in front of it. AMYRIS is a developer and manufacturer of sustainable ingredients using its proprietary fermentation technology that processes plant sugars into bioidentical molecules. In our opinion, AMYRIS has been one of the leaders in disrupting the traditional ingredient supply chain, displacing ingredients typically sourced from plants, animals, and petroleum derivatives. The company instead develops these ingredients from microbial engineering and can provide customers with assurances around costs, quality, and faster time to market. The company has also developed several of its own product lines over the last few years that are driving significant top-line growth for the company. The stock trades on the NASDAQ under the ticker symbol AMRS and currently has an enterprise value of roughly 1.6 to 1.7 billion. So with that brief background, I will turn to John. John, welcome, and appreciate you taking time for this fireside chat.
Thank you, Amit, and it's great to be on, and great to be on with somebody who joined our coverage at a moment where our future was not quite as certain. So thank you for being with us, and thank you for helping navigate the challenging times of really underpinning or building and underpinning our infrastructure, our foundation to really have delivered the amazing growth over the last 3 to 4 years and really get us to a point where we're now clearly on a path to continued leadership in this nascent field of synthetic biology.
I remember, John, when we first came to visit you guys, your facilities in Emeryville, we were pretty much blown away with what was happening over there. We saw a lot of potential. And just to begin today's conversation, maybe it could be useful for folks viewing this to get a little history of the company's technology and how you have leveraged that to arrive at your current business model. And over time, competition has emerged, but you guys have, shown that, this is not something you can just do in the labs. You need to take these things to a commercial scale to deliver growth, profits, all of that stuff. So just a little background on, that side of the story would probably be very helpful for, people watching this.
Sure. I'm happy to do that, Amit, and I'll take you through a bit of how we got here. Starting with the last point you made on competition, there's always competition, but as you've seen in the market, our competition seems to be one of lots of storytelling and us continuing to deliver products and growing real revenue from real customers. And we think that's what makes impact or delivers impact and makes a real difference. It hasn't been easy. I think, we've been the innovators, the leaders in establishing the foundation of how synthetic biology gets done. All the way from our first project, which was the anti-malarial project funded by Bill and Melinda Gates and the foundation, which was all about taking artemisinic acid and making it from fermentation instead of the wormwood plant to try to take out price volatility, and in that particular case, save children's lives, because price and availability was driving families for not having access. And at the time we started, we had 1.6 million kids a year, mostly in sub-Saharan Africa, dying by not having access. So price there and stability of supply meant a lot, life and death for a child. If you think about that start, really our business since then has been a lot about the same, making more accessible rare molecules that are available in nature, but are either expensive or very volatile in the supply chain in the ways that they're made today. Our second big attempt was really renewable fuels. And we really were not successful at getting renewable fuels commercialized, and really because of our standard. And our standard is it has to be a sustainable business. It has to be a business where you can make and sell the product for more than what it costs in inputs. And we couldn't get there with renewable fuels. A little bit because we struggled to scale our technology, and a little bit because crude oil and the markets for crude oil the outlook and pricing changed dramatically around the time we commercialized. Bottom line is we didn't succeed in really commercializing that technology, even though from a technical standpoint, we made the best renewable diesel and we make the best renewable jet fuel in the world when it comes to purity, when it comes to energy content, and when it comes to effectiveness from an operating perspective. So again, great technology success, not a great business success. And then starting around 2012, after the crash of our renewable fuels business, we started to think about what else could we do with the technology to really have impact. And we started to realize there was a great opportunity around renewable chemistry, around clean, sustainable chemistry, really back to where our roots were, which was all about finding rare, interesting molecules that we can actually scale and make more available, and therefore disrupt the end markets for those molecules. Things like Reb M as a zero-calorie natural sweetener made from sugarcane. Things like squalane, the best emollient and moisturizer in the world, that traditionally was harvested from sharks, then olive trees, and now we make it from sugarcane. We're now 80% of that market globally. Chemistry that we've invented, like hemisqualane, that's replacing silicones. One of the most amazing polymers in the world today, which is really farnesene that's used in tires. What we did in vitamin E, which now, our technology coming from farnesene, replacing crude oil as the intermediate to make isophytol that then makes vitamin E. Little did I ever imagine that we'd end up being about a quarter of the world's market for vitamin E. So those are just some examples of what we've successfully built, developed, and commercialized since 2012, after we really transitioned the business to be much more of a sustainable chemistry into end markets that can be disrupted by solving supply chain issues, lowering the cost, making more available, and doing it in a better way, purer, cleaner molecules for the markets we play in. And then the last transformation of the business was really value chain, realizing that just being a supplier of molecules didn't actually create the most value for our shareholders. So in 2016, we started an experiment to really go all the way to the consumer, in that case with a beauty brand, with a skincare brand called Biossance. And again, fast forward to where we are today, we now have 8 or 9 consumer brands. We are number one in fastest growing, most successful skincare brand in North America. We are the fastest growing hair care brand in North America. We are the fastest growing clean color cosmetics brand. We have an amazing brand for babies and families called Pipette. We have an amazing luxury brand called Costa Brazil, and so on. So we've now demonstrated that we are a super successful builder of clean consumer brands in health, beauty, and wellness. Our consumer brands this year, 2022, will do over $250 million in revenue at over 60% gross margin. And if you think about the growth since the end of 2019, our consumer business has grown over 14 times since the end of 2019. About half of our business is direct to consumer, which generates over 80% gross margin. And we just have an amazing portfolio that is just executing really what the consumer wants: clean, sustainable chemistry, delivering highly efficacious formulations that's really on target for what a consumer wants. And we've been lucky. I didn't plan on there being a pandemic. I didn't plan on the pandemic causing hair to fall out. I didn't plan on the pandemic putting us behind Zoom screens, focusing us on our skincare. I didn't plan on all that actually accelerating our growth, but it has. And we've actually developed the most successful portfolio in beauty of consumer brands powered by synthetic biology. We are the makers of the chemistry. We do formulate our own products, and we own the end market brand that's actually attracting and driving consumer growth and margin. And all of that is now getting us to a point where financially our business has really turned a corner. We are in the process of next year delivering an EBITDA positive year. We deliver significant positive free cash flow in 2024. We are at a point where in the fourth quarter of this year, we'll have in our core business, no transaction revenue, close to $150 million in revenue just in the fourth quarter of this year. And then we'll be at about $1 billion annual revenue run rate of profitable revenue by the fourth quarter of next year. And again, all of that combined just kind of brings to bear the power of synthetic biology when connected with a successful strategy at really being able to execute and grab value from the value chain in a way that supports the kind of growth rate we've been able to achieve. I hope that gives you a picture of where we've been and where we are now, Amit.
Well, that's very helpful, John. I remember, when you were first bringing Bioscience to market and we were trying to model for it, we were expecting, 100,000 in revenues from it for that year. And that business has now grown so meaningfully. And you have come out with multiple lines sort of in parallel, to that offering, to touching on different segments of that market. And I think, the big change in the story was when you took a little bit more control over your own destiny by bringing these products to the market. Yes, maybe a little risky and requires a little bit upfront capital investments, etc. But it has given you, a position where you can control some of these dynamics, in a better way versus being reliant on other, customers using your ingredients, etc. So congratulations on, the execution. And in that sense, you touched on some of the, future top line cash flow type, numbers. Can you help the audience understand sort of the revenue growth levels that are available to AMYRIS? I know, the speed at which these molecules are now being developed and brought to market, there's been a big change in that. There's a lot of acceleration on that front. You have a lot of new products in the pipeline as well. If we take sort of a 5 to 10 year view, what does the growth trajectory look like? And what will be the challenges you might have to address, in getting to those milestones?
Yeah, look, if you think about the business going forward, I would say there are 3 to 4 big initiatives, right, that you can actually track our progress with. I think the first 2 we're in the middle of right now, right, which is the Fit to Win agenda we announced at the last earnings call, which really delivers over $50 million of cash savings this year, really in the second half. And then full year next year delivers $150 to $175 million of cash benefit to the bottom line on the basis of the first half of this year. So that's not even what the absolute savings are or the potential are. And I can tell you we're already delivering that. Just the month of August, just to give you a reference, the month of August is our strongest consumer sales month so far in our history. It's been phenomenal. By the way, that's on top of the month of July having been a record, right? So this quarter will set a new record for our consumer business at a time when everybody's concerned about where the consumer's going. And I think in beauty, we're very fortunate with this long-term effect called the lipstick effect, which is consumers in times of uncertainty, financial uncertainty, revert back to simple luxuries, lipstick, skincare, those kind of things, which makes beauty a really robust category and segment, even during tough financial times. And I can tell you our numbers prove that out. So Fit to Win, major cash generator, really making our whole base more efficient. Meaning, I'll give you an example in Bioscience, we've just taken out 30% of our cost of actually filling a direct-to-consumer order, which is about half of our revenue for Bioscience. We're in the process right now of moving quite a bit of Bioscience's production, not all, to our wholly owned Brazilian factory, Interfaces, which we purchased earlier this year, which actually combined with sourcing in Brazil, so packaging, sourcing, and our own manufacturing, I mean, it's incredible to me, actually reduce our cost of goods for a Biossance product delivered on the shelf by 50%. That's a 50% reduction in COGS on top of a 30% reduction in the cost to fill. And those are the kinds of impacts that we're delivering around our Fit to Win agenda. So that's number one. I think number two priority that you'll also see this year is our current transaction around a couple of our ingredients in our portfolio, keeping in mind that we currently produce 13 fermentation ingredients in our portfolio, very quickly going to about 16 by the time we end this year. So our year this year for scaling up new molecules has been outstanding, okay? And we have 24 more in development. And I don't mean development programs. There are some competitors who rack up numbers around development programs. I actually don't know what the hell they're talking about because there's little change in their recurring revenue. So I'm not quite sure what their programs mean. When I talk about 24 molecules in development, I'm talking about molecules that at a minimum in their first year out deliver millions of dollars in revenue and then significantly impact our growth rate. Okay, that's what's in the pipeline. There's several more being scaled this year, and we're taking two and monetizing them for what will end up being well over $400 million in total value, of which 350 million of that will be paid upfront this year. And why does that matter? Because our strategy is to use our technology to make amazing ingredients that the world needs and wants, and from those ingredients, monetize, create the most value by selling them to consumers while using the technology and the ingredient value to fund the growth in consumers. And that is a super interesting business model. When you can use the technology and its ability to create real molecules, real clean, sustainable chemistry for the planet. And you can take those molecules, make great consumer brands out of those molecules, and at the same time, supply the rest of the industry and then monetize that supply. I don't want to be a big business-to-business marketer. Not because we're not good at it. We've created some amazing businesses that way. But actually because I'd rather put all of our energy into one business model, which is consumer. And I'd rather put the B2B sales in the hands of the best B2B partner, just like we did with Ingredion for our sweetener. Our sweetener now is growing at twice the rate we ever expected. It's an amazing outcome in a great partnership. We still manufacture the sweetener. We still control the supply chain, and the value chain is partnered with Ingredion. We're doing exactly the same thing again as a way to really invest and continue growing the consumer business. And then, like, my third big thing is, so where does the consumer business go? I think we're going to end up with about 12 brands in the portfolio. We'll be there by the end of next year. And I expect the consumer business, I mean, we're growing over 150% this year in consumer. I'd expect to do that again next year and likely the year after. I expect by the time we end 2025 to have a solid run rate of about $2 billion a year in consumer, generating about a 30% adjusted EBITDA margin, call it our operating profit, and a gross margin somewhere between 65 and 70%. That is a solid business, and that is the business we think actually can take the company to a valuation of, I don't know, somewhere between 10 to 20 billion over the next, call it 24 to 36 months. And that is interesting to me, super interesting, because that starts to reward our shareholders for the effort, commitment, and staying power that they've had in enabling us to fund a real difference maker for the world. And by the way, when I think about funding, in total, our funding will have been about $2.5 billion, which is actually, compared to some of the competitors in our sector, super efficient in the amount of revenue and growth and the substantial technology we've built underneath that. So, look, I think those are really the three key points. It's fit to win, it's ingredients funding consumer, and it's a consumer business that'll end up with 12 or so brands growing 150% a year with about $2 billion of annualized run rate by the end of 25, and just delivering super strong cash to the bottom line.
I understand. Talking about the 24 molecules, John, that you mentioned, given that you are looking to partner for some of them and, bring some of them to market organically, what's the split between, what the 24 molecules you have in the pipeline between, working on it, AMYRIS working on bringing those to the market versus partnering on some of those?
It's about 80-20. 80% of that portfolio is ours, no partner. And about 20% is partner-based. Now, by the way, that's a significant shift. We used to be 80-20 the other way, 80% partner, 20% ours. And you've seen over the last 24 months us shift that completely, really because of the strength in our portfolio. Now that we have significant growth in our own business all the way to the consumer, we actually are seeing a desire to take more control of the technology and let it be less controlled by our partners. So that's why we're now at 80-20. And you can see it in our financials. You'll see that collaboration revenue this year is around 10 to 14 million. And at our peak, we were running about 50 million a year in collaboration revenue. So significant shift, taking back control, really powered by our ability to go right to the consumer and access the most margin and then returns back for our shareholders.
Understood. And then, just touching on the new Barra Bonita plant in Brazil, that is expected to ramp through the rest of 2022. And given the pipeline is so robust, would it be too early to speculate on your capacity needs, in the next, 24 to 36 months? Will Barra Bonita be sufficient to support this pipeline?
Yeah, we need to very quickly triple the size of Barra Bonita, okay, just based on our demand pipeline and based on current volume, okay? So not even any big step out occurring, just delivering on what's in right now. And to triple the size, we already have that identified, right? We're basically taking the 4 large tanks, 600,000 liters each. We're taking those tanks out of really storage. We had bought them and designed them for a partnership with São Martin when we were focused on the fuel business back in 2009 and 2010. So we've been able to repurpose those tanks, and each or every 2 of those tanks is equal to a new Brotas, or equal to the big lines, the sum of the big lines in Barra Bonita. So 4 of those tanks, which equals 2.4 thousand tons of fermentation capacity. So in other words, 4 600,000 liter tanks each basically give us 3x the size of the current Barra Bonita. So in other words, Barra Bonita, when it's done, will be 3+ times the size of the old Brotas facility once these 2 additional lines are added of the 2 600,000 liter tanks per line, okay? And we expect one of those lines, so the first 2 600,000 liter tanks, to be in place by the end of 2023. And then the second big line, to be in place by 2024. And by that cadence, we'll keep the facility utilized at around 90% for the next 3 years.
Understood. Just touching on your international opportunity, John, I know for the US, with respect to your the opportunity here in the beauty segment and the consumer segment, you've been collaborating with influencers, folks who are leading sort of the beauty market in terms of their presence in that industry. Are you potentially going to use a similar strategy for the international markets as well? What kind of infrastructure needs to be built up to capture the brand recognition that you're developing here and monetizing that internationally?
And we're currently in Australia, in China, in the UK, and in Portugal. And we use Portugal, and by the way, in Brazil. We used Brazil and Portugal as great experiments to see, is it a repeatable model? We have a playbook that we think replicates. And I'm happy to tell you, Portugal is probably one of the most recent examples. We launched Biossance in Portugal around July. And it is now the number 3 skincare brand in our leading retailer in Portugal, P&C, who's the number 1 retailer for prestige beauty in Portugal. Okay, so number 1 retailer in Portugal, we're already the number 3 skincare brand after about 3 months. And we used the same playbook. We used influencers to connect with communities. We got people very engaged. The thing that we did not use in Portugal that we plan on using in the UK and other markets is actually our direct-to-consumer platform. So we think that our playbook, combined with direct-to-consumer, actually gives us the opportunity for our brands to be number 1 in category within 12 to 18 months of launching in international markets. We're seeing international markets actually even more interesting than the US because there's less competition for clean beauty in those markets, and the consumer is doubling down on clean and sustainable. So there's a wave going around the world of consumers wanting clean, sustainable, and wanting indie, small independent brands to be the brands they connect with. They're actually moving away from large brands owned by L'Oreal and owned by Estée Lauder and others faster than we've ever seen in history. And a lot of that is they're seeking better efficacy. They're seeking better products. They want a sustainability story. They want to know the ingredients. They want simple formulations. Those are all the standards we set for the industry. So we're the standard setter. We're getting the share, and there's a wave around the world that we think we can attract using our cookie cutter strategy for how we go into market. We do think we have to be local. We think we always need to partner with a leading retailer in the local country. And we think our direct-to-consumer business needs to lead so that we get a lot of insight. We're doing fantastic in the UK. We use Space NK as our top retailer in the UK. Space NK with the JVN brand as an example. JVN is the number 1 hair care brand, actually beating Olaplex inside the Space NK store. So again, our strategy is working internationally. We're doing it one country, one market at a time, and we're just replicating what we know has been a great model for us to get share in the most efficient way possible across markets and engaging deep with communities of consumers. Understood.
You earlier said August has been going nicely for you. Could you just give the audience some color on so far the second half of 2022? Is it coming in line with your expectations? And are you seeing any challenges from the supply chain side? There's talk every day on the news about recession, inflation, all of those types of macro drivers, how you are managing through all of that, at this point, I guess, with the visibility you have.
Look, I'll give you a couple of points. I think on the consumer's been super robust. So our issue has not actually been dealing with demand. If anything, the consumer demand has exceeded my expectations. We'll have another quarter that is another record. And we've been growing 20 to 30% a quarter in our consumer business. And I don't expect the third quarter to be anything less than that. Okay, so another amazing quarter on the consumer side. When I talk about records in August, like just this weekend, I think we've pulled in total from Friday to end of day Sunday, probably somewhere around 2 to 3 million in consumer sales, right? That has just been a robust week after week, weekend after weekend performance for us, and we're super, super pleased with that. Look, I think on the supply chain side, it has been and continues to be super challenging. I can tell you it's getting a lot better, but it's still problematic. So what we've reverted to is just re-engineering our supply chain. And I can tell you that the actions we've taken are really coming through well. You'll see some of it play out in the third quarter with a lot lower cash utilization than in the prior 2 quarters. And then you'll see it really come through in the fourth quarter where cash utilization drops significantly. I would expect our cash use in the fourth quarter to be well below 50 million. I'd expect us to be very close on the operating side to adjusted EBITDA positive and a top line that continues to be super robust. So not easy. A lot of focus on re-engineering supply chain to get out of the struggles we've had, especially on cash use. We've got Barra Bonita up operating super well. It's actually delivering some of our best fermentations ever. We've got several campaigns operating at Barra Bonita right now, and will be operating through the end of the year. We're moving to low-cost farnesene production this month at Barra Bonita, and that'll change the economics dramatically across our ingredients business. And I think the last point is because of Barra Bonita, you're going to see an ingredients business like you haven't seen before. Like, I think we're seeing something like around a 50% jump in our ingredients revenue as you go into the second half from the growth rate we saw in the first half. So I know we had guided around 40% year-on-year ingredients. The reality is we'll be a little bit better than that. And a lot of that because we really were able to get on with Barra Bonita producing and delivering results for us.
Thank you, John. That's all the time we have today. Really appreciate all your insights. Hopefully the audience finds this helpful as well. Again, appreciate your time today. Thank you so much.